Welcome back to the Crypto Father channel. Today is the 4th of July. Happy 4th of July to my American friends. In today's video, limitations to Bitcoin's rise this cycle, new stablecoins launched by sanctioned Russian institutions, more BNB investments, and the fear of stablecoins undermining money trusts. All of that coming up today, but first we're going to take a look at the crypto market, which is presently standing at a nice round number of $3.47 trillion of market cap, with 63% of Bitcoin dominance and 9% on ETH. Both of these numbers have jumped up. Altcoins are becoming irrelevant, it seems. Bitcoin right now is at $109,000. It's teetering, playing around, tickling the $110,000 mark. Ethereum at 2,597. It was at 2,600. It retraced a little bit. Ethereum is also playing around with 2,600. It's got to break above that psychological level in order to continue upwards, I believe. BNB 662. Solana at 152, established itself at 150. Hopefully that holds. Cardano at 59 cents. It was at 60 cents just yesterday. Again, same thing with the Cardano with the 60 cents. It's kind of a psychological level. Round numbers are, and so that's what Cardano needs to break above in order to see those highs again. Toncoin still below $3. Litecoin was above $90, presently at $89. Polkadot at $3.55. And Picoin at 49 cents. I think it pumped a little bit down a lot on the 7-day rather. And quick look at Meowcoin. Meowcoin's up 4% all the way to quadruple 07. Not too bad for Meowcoin, but still absolutely nowhere. Market cap is sitting at $526,000, so that's a $26,000 pump on Meowcoin. Looking at the Bitcoin charts, Bitcoin is looking pretty nice. It's presently forming a green candle on the 109,000 support or resistance rather. It needs to break above that and create another candle, open up another candle above that level in order for us to see an upward trend. Hopefully, like we saw over here, that's when it reached the all-time high of 111 or 112,000 dollars. So we need to see that happening in order for Bitcoin to continue up that way. Ethereum also producing a nice green candle above the support of 05 on the discount Fibonacci, and of course on the retracement Fibonacci retracement. And the total for altcoins is where it is. It's still in the trending channel, in the channel right here between those two Fibonacci levels. So we're not going to see a lot of movement on this unless it breaks above that. Plan B released a video for the month of June, and he makes an interesting point that answers the question of why Bitcoin isn't pumping. In his mind, and this is his position, and I kind of see that being the reality. Basically, the amount of money that is in Bitcoin right now, it's just simply spilling over into ETFs. So a lot of people are selling their Bitcoin and putting the money, the proceeds, into Bitcoin ETFs. So there's no more self-custody, particularly in Europe where he seems to be located. He's talking about the regulations that are not very Bitcoin friendly or crypto friendly. In his view, a lot of people may be stepping out of self-custody Bitcoin and into Bitcoin ETFs, which means there is no new money coming into the market. It's just spilling over from self-custody into the ETFs. And so it looks like MicroStrategy, BlackRock are scooping up a lot of Bitcoin, but they're simply buying off the Bitcoin that has been sold off by people who were with self-custody of Bitcoin, and now that money is simply going into those ETFs. So that's a good theory. I think it works, and that could explain why the price of Bitcoin is not really going up despite the apparent mass purchases of Bitcoin by those institutions. Russia sanctioned arms giant Rostic launches stablecoin and payment platform. So despite sanctions, Russia just doesn't give a shit, and they go on with their thing, and quite possibly are going to continue world trade and bypass sanctions entirely without the need to use the US dollar, simply by using a stable coin or whatever other cryptocurrency that they have created. Speaking of freedom, self-custody and such, if you are interested in finding more about crypto and about learning how millennials are rewriting the rules of money, pick up a copy of Crypto and Millennials. It is now available on Kindle for pre-sale. The full book will become available on September 1st, so you can hop on now over to Amazon and hit that pre-order with one click. It's $10.99, different prices for different regions. Not a massive amount for a book that explains a lot about what cryptocurrencies are, why they're important, and provides you with hope and understanding for the future. So pick that up right now. Russian defense and technology conglomerate Rostic has created a digital token pegged to the ruble and developed a proprietary payment platform. The state-owned corporation said it hopes to see the token, which is based on a major blockchain, listed on leading cryptocurrency exchanges and added to popular wallets. Russia's Rostic, a major developer and manufacturer of military, industrial, and technological equipment sanctioned by the West, has announced the launch of a token called RubX and a payment platform named RTPay that's going to be launched, or is being launched, on Tron. The two have been developed as part of its strategy for digital transformation and form a new financial ecosystem meant to provide both companies and individual users with safe and efficient payments of any scale, the group insisted in a press release. It also detailed RubX is based on the Tron blockchain. Its code will be posted on GitHub, and it will also be verified by the independent international company CertiK. Tron was obviously launched by Sun, Chinese-born entrepreneur Justin, who has won its popularity thanks to a high throughput and relatively low fees, RBC remarked in a report. However, Tron, there's some oddity in Tron. I've got some Tron sitting on the blockchain, but I can't access it in my wallet because I don't have any Tron in the wallet. It's so weird. Apparently, I don't know if this is true for all cases, but for the Descent wallet, you need to hold some Tron in your wallet in order to be able to access the Tron that is on the blockchain, which I don't understand exactly how that works. But I've encountered similar problems with Tron on the Tangem wallet with excessively high fees. So I don't know what's going on with Tron, but it's an odd blockchain. It may have high throughputs, but there are hooks and snags along the way that make it a bit cumbersome to use. So this is another attempt by Russia to bypass sanctions. TD9 setup on Bitcoin price chart suggests it could take 4 years to reach $149,000. So this is a bit of a downer. According to a new analysis shared by crypto analyst Tony, Bitcoin has just closed the quarterly chart with a perfected TD9 sell setup. This is actually interesting because it adds a possibly long timeline before Bitcoin can reach any further significant price target. I'm not sure that I agree with this, but let's continue reading. The TD9 is a component of the TD sequential indicator, which is often used to identify trend exhaustion, potential reversal, and possible trend changes. Interestingly, what makes this particular signal notable at this point is that it is now projecting a TD risk level of $149,490, which is essentially a price target for Bitcoin. But if past patterns on the TD9 indicator are anything to go by, getting there might take much longer than most expect. In 2017, a similar perfected TD9 appeared during Bitcoin's first rally to 20,000. At the time, the TD risk was projected at 35,000. It wasn't until late 2020, roughly 4 years later, that Bitcoin finally reached and broke above that level. A prior occurrence in 2014 offered the same story. So here we have 2014 and the projection of 915 bars, at which point Bitcoin hit the level that this TD9 chart predicted. Same thing happened in 2017 2017 to 2021. Back in 2014, the TD9 setup projected a TD risk of 2,400, but it took approximately 3.5 years to cross that threshold. Now, despite the bullish sentiment today, this historical prediction suggests it could take similar years before the 149,000 target being currently projected by the TD risk is finally tested and breached. This is why a lot of people seem to be thinking that we are approaching a bear market. Although the analysis from Plan B does not agree with that, I suggest you watch that video as well to have a better understanding of what the view is on the Bitcoin movements from Plan B. And Bitmine has been doing exceptionally well. I believe it pumped over 1,000% in the past 2 days on Tommy Lee's announcement of the company using or creating a Ethereum strategic reserve. Now, Fundstrat's Tom Lee says 2 factors preventing Bitcoin from going to the moon despite heavy demand from ETFs. Fundstrat co-founder and chief investor officer Tom Lee is highlighting 2 possible reasons why Bitcoin has failed to go to the moon despite the Crypto King's spot exchange traded funds. One of the things he says is the strategy that has been employed in the accumulation of ETFs. I think what happened is a couple of things. One is a lot of these ETFs may have been receiving in-kind exchange. So people have their crypto keys, give it to the ETF providers, and then they just stepped up their bases. So that's not going to push up the price of Bitcoin. The other one is what Plan B was talking about, that people simply sold their Bitcoin off in order to avoid self-custody and then spill that money over into ETFs. Profit taking among early Bitcoin investors could be playing a role in suppressing the price of the largest crypto asset as well. The second is that the ones who aren't involved in ETFs, but maybe they have $10 of Bitcoin. We have clients that have bought Bitcoin at $100 and now it's 100,000. They don't care if Bitcoin goes to 1 million. They are probably sellers at around 100,000. So we're churning the base now because 95% of the industrial world doesn't own Bitcoin, but a very significant portion of Bitcoin holders are sitting on huge gains. So I think this is the churn that's happening in Bitcoin now. So these could be the 2 reasons, according to Tom Lee, why Bitcoin is not pumping. Nanolabs. I talked about Nanolabs in the past. Nanolabs loads up on BNB, 50 million worth of that and 1 billion war chest in sight. Nanolab drops 50 million on 74,000 BNB tokens, targeting 1 billion holdings and dollars holding and 5 to 10% supply dominance as first public company to stockpile Binance coin. Nanolabs just acquired approximately 50 million worth of BNB over the counter, bringing our mainstream digital asset reserve to around 160 million. And I guess they're gunning for that $1 billion in BNB holding. Crazy. And not all news are good news. Apparently, some people believe that the Trump's new bill, the big beautiful bill, is bad news for Bitcoin. Ace believes a temporary drop to 90,000 is still possible once President Trump signs the newly passed economic bill into law. The bill, which includes both tax cuts and a higher debt ceiling, is expected to push the U.S. Treasury into another round of heavy borrowing, potentially draining liquidity from risk assets like Bitcoin. Hayes explains that the Treasury's move to replenish its cash reserves could briefly suck capital out of the system, creating short-term downward pressure on crypto. However, he views this as a pause, not a reversal. In his view, the bull cycle remains intact and Bitcoin is poised to resume its climb once the market adjusts to the influx of new debt. If Bitcoin were to drop to 90,000, I think that would create a lot of problems for a lot of those new companies creating Bitcoin reserves, because they do have a ceiling. There is a price tag at which they entered, and so Bitcoin dropping below that price tag creates a big problem. A lot of these companies entered into the big Bitcoin market at 100,000, so Bitcoin dropping to 90,000 would create a massive deficit on their part. Beyond market mechanics, Hayes raises a large issue: the growing convergence of crypto and US fiscal policy. Believes stablecoins could become key tools for the government, used by large banks to absorb treasury bills as part of a broader strategy to manage national debt. In this scenario, control over stablecoin issuance may shift away from private firms to regulated financial institutions. BOE governor warns stablecoin boom could undermine monetary trust. Central banks on alert. If stablecoins boom, like we say, people may move their money. The fear is that banks would begin losing their deposits, although that wouldn't happen. I mean, not a lot of people. I mean, there would be some people obviously moving into stablecoins as we have been doing in the past, but there's plenty of money in central banks that would remain there and be kept there. So but BOE Governor Andrew Bailey said the definition of a reserve currency is shifting, now centered on liquidity and safety rather than convertibility. He warned that stablecoins could weaken monetary trust in widely adopted outside regulatory frameworks. Bailey called on central banks to reassess their role amid payment innovation and cross-border liquidity risk. So it looks like the hands of central banks is being forced, whether they like it or not, to begin adopting cryptocurrencies and begin to move into the blockchain ecosystem, because they might get left behind if money begins to flow out of central banks and into stable coins that are held by cryptocurrency exchanges and DeFi platforms rather than central banks. Trump's big beautiful bill passes and Bitcoin could fall to 90,000, says Arthur Hayes. So there seems to be a little bit of FUD going around. And I guess it's expected. I mean, we had Bitcoin pump to all-time highs before the inauguration of the new president, and then of course after he got into office, everything tanked massively. So that was a clear case of buy the rumors, sell the news. Bitcoin may be close to a new all-time high after breaking 110,000 earlier today, Thursday, and today again, but it's still likely to test 90,000 again this year after President Trump's big beautiful bill is signed into law. When will this happen is another question, though. Crypto entrepreneur Arthur Hayes said this week. Hayes argued that the Treasury would refill its general account, creating potential liquidity drain from markets and in turn affecting the price of assets like Bitcoin. Back in May, the billionaire wrote that Bitcoin could hit 1 million per coin by 2028 as investors pull money out of US Treasuries and park it into other assets. 2028 would be the accumulation phase for the next bull market. Hayes also wrote in his Wednesday blog post that the US government's interest in stablecoins is not about solving payment issues, but rather cutting the deficit. Senate last month passed the Genius Act, a piece of legislation that creates a framework for issuing and trading stablecoins in the US. And so things have moved forward and are moving forward, continue to move forward. Hayes argued that the law would stop private companies from issuing stablecoins, and instead, big banks could use the digital tokens to buy up US Treasury bills as a way of reducing debt. If you'd like to know more about things like big banks and why cryptocurrencies are taking off and why it's important for them to take off, pick up a copy of Crypto and Millennials, how millennials are rewriting the rules of money. It unpacks the origins of the financial crisis millennial inherited, to exploring the rise of decentralized finance and blockchain technology. Ledger Lane breaks down complex concepts into clear, actionable insights. You'll learn how crypto offers more than just investment opportunities. It provides freedom, transparency, and control over your own money like never before. And it basically sheds light on why big banks are not necessary. They're not part of the crypto space, and they are right now struggling to catch up with that particular space. So you can pick up the book right now and pre-order. It'll be available on September 1st. Get that thing now. Also, do remember to pick up a Descent wallet. Ref links below the video. The order link for the book will also be below the video. I'll add that as well. So do those two things. $11 for the book. You get a $30 discount for the Descent wallet if you purchase one copy, and $99 discount if you purchase two of them. So pick that up as well for yourself. Get those things. Get crypto smart. Be secure. Save your crypto on your Descent wallet, because that's the only way to store it, to keep it safe so it doesn't get hacked or stolen. And I will see you next time. Today is Friday. Enjoy your freaking weekend, well-deserved rest and all that stuff, and I will see you on the next episode of the Crypto Father video release. Peace.